Half of baby boomers are about to lose their homes, and no one's talking about it. Property taxes are exploding. Insurance companies are pulling out of entire states. Medical bills are draining retirement accounts faster than Social Security can deposit. And in 2026, we're looking at the biggest forced downsizing event in U.S. history. Over 112,000 seniors are already homeless, and the number is expected to double by 2030. If you think owning a home means you're safe, think again. The collapse is already here. Let me show you how fast it's coming for everyone over 60. They didn't pay off their homes, they refinanced them to death. You've been told boomers own their homes free and clear, right? That they worked hard, saved, and paid off their 30-year fixed-rate mortgages like clockwork? Well, here's the twist nobody talks about. Tens of millions of boomers didn't pay off those homes. They refinanced them to death. During the refinancing boom of the 2000s and again during the COVID-19 stimulus era, millions of baby boomers cashed out the equity in their homes like it was a personal ATM. Between 2005 and 2021, over 40% of boomer homeowners refinanced at least once, with many doing it 3 or 4 times, extracting equity that was supposed to be their retirement cushion. According to data from Black Knight Inc., boomer homeowners pulled over $1.7 trillion in cash-out refinances from 2005-2020 alone. And guess what they used it for? Boats, second homes, helping adult children, and sometimes just to keep up with the Joneses. But now, that equity is gone, and they're stuck with mortgages that go well into their 80s. Freddie Mac's own research shows a 65-year-old homeowner in 2024 is twice as likely to still carry mortgage debt than someone the same age 20 years ago. We're talking payments of $1,800, $3,500 a month, plus rising property taxes and insurance premiums. And now that property values have flattened, or in some markets are actually declining, their home equity isn't recovering fast enough. This isn't the quiet retirement they imagined. It's a ticking financial time bomb, with boomers watching their golden years rust away as they pray their reverse mortgage application gets approved. If you thought the mortgage crisis was over in 2008, just wait until 2026, when aging homeowners can't sell, can't refinance again, and can't afford to die in peace. Fixed incomes can't handle variable disasters. Let me break something down that economists love to brush under the rug. Boomers are the most asset-rich generation in American history, but they're also the most cash-poor. And that's a disaster when your expenses keep going up, but your income stays frozen. The average Social Security payout in 2025 is $1,905 per month. Meanwhile, the average cost of property tax, insurance, HOA fees, utilities, and basic home maintenance now exceeds $2,700 a month in most metro areas. That means even without a mortgage, boomers are bleeding money just to sit inside the same 4 walls they've owned for decades. What happens when the AC fails, or the roof leaks, or a major storm floods their basement because climate change has made 100-year events happen every other year? FEMA data shows that home disaster insurance claims are up 47% since 2019, and in Florida and California, homeowners are literally being dropped by insurers. So now they're forced onto ultra-expensive state-run, last resort policies that can cost 3x more than the private market. Oh, and Medicare? Doesn't help you fix a roof. The truth is, most boomers are living on a razor's edge. One broken HVAC system, one property tax hike, one emergency plumbing issue, and the whole thing collapses. They end up dipping into savings that were already too small to begin with. Vanguard reports the average boomer has just $207,000 saved for retirement, which sounds like a lot until you realize that's barely 5 years of home ownership expenses at today's rates. No wonder over 2 million Americans over 65 are now working part-time. Not to thrive, but just to stay in their homes. This isn't retirement. This is survival mode disguised with a garden gnome out front. The great downsizing lie is falling apart. Everyone thinks boomers can just downsize and everything will be fine. Sell the big suburban house, buy a cute little condo, pocket the difference, and retire on a beach with a book, right? Except, that's pure fantasy in today's market. You'd think selling a 4-bedroom in the suburbs would mean you're swimming in equity, but here's what the data actually shows. When boomers sell, They're lucky to break even after fees, repairs, and taxes. According to the National Association of Realtors, the average cost to prep a home for sale in 2025 is now $43,000. That's inspections, repairs, painting, staging, and landscaping. Tack on the 6% agent commission, moving costs, and capital gains taxes if they've owned the place long enough, and suddenly, that $600,000 house only yields about $510,000 in cash if it sells. Now try buying a one-level ranch or senior accessible condo in the same city. It'll cost $480,000 or more because the supply of small, accessible homes is evaporating. Baby boomers aren't the only ones chasing them. Millennials with kids are too, and Gen Z doesn't want stairs either. Demand is high, inventory is non-existent, and everything's overpriced. In fact, HUD reports that only 1 in 4 homes in America is age-in-place ready, meaning one story, no steps, wide doorways, and accessible bathrooms. And new construction isn't helping. Builders aren't making affordable single-story homes. They're building luxury units for wealthy investors or 3-story townhomes that no 72-year-old with a hip replacement can navigate. So boomers are stuck in 2 big homes they can't maintain, paying bills they can't afford, and praying for a buyer who can qualify for a 7.5% mortgage. The downsizing dream? Dead. Just like the illusion that you can sell high and live small. In this market, you either stay put and suffer or sell out and still suffer. Property taxes are now eating boomers alive. Here's something nobody wants to say out loud. Owning a paid-off home doesn't mean you're free. It just means you're renting it from the government now. And boomers? They're the new tenants of the tax office. Across America, property taxes have quietly exploded, and it's killing retirees who thought they could coast into their 70s on a fixed income. According to Adams' 2025 analysis, the average U.S. property tax bill is now $4,296 a year. But in states like New Jersey, Illinois, Connecticut, and even Texas, that number explodes past $10,000 annually. And those increases are compounding every single year. Why? Because local governments are broke, pensions are underfunded, infrastructure is crumbling, and cities are using your house as an ATM to fill their gaps. Boomers are getting hit hardest because they're often in older homes in established neighborhoods, which means they're sitting on valuable land that's appreciated wildly, but they're not seeing any benefit from it. Counties reassess property values every few years, and guess what? They don't care if you're retired or on Social Security. You still owe, and these hikes aren't mild. Median property tax rates have outpaced inflation by 62% since 2010. In Austin, Texas, property tax bills have gone up more than 200% since 2014, even while home values have stalled. So retirees who once paid $300 a month in taxes are now coughing up $1,000. And that's on top of insurance premiums, HOA fees, and maintenance. And if you fall behind, it's not a slap on the wrist. Counties are auctioning off homes for tax delinquency in record numbers. In 2024 alone, more than 68,000 seniors lost their homes in tax lien foreclosures, even if their mortgage was paid off. Think about that. You can own a house outright for 30 years and still lose it because you couldn't scrape together the taxes. This isn't just a glitch in the system, it is the system. It's a treadmill you can't get off of, and it's chewing boomers up like gum in a wood chipper. Insurance companies have declared war on retirees. If you think boomers are being punished by accident, let me assure you, this next crisis is by design. Because what happens when the housing market becomes more volatile? When natural disasters increase, when building costs skyrocket, and when insurance companies realize they can't make the margins they used to. They just stop insuring homes. Period. And retirees are their first targets. In 2024 alone, State Farm, Allstate, and Farmers all pulled out of multiple states, including California, Florida, and Louisiana. That's not a theory. That's happening right now. Why? Climate risk. But also, because older homes cost more to insure. Boomers are living in 40, 50, even 60-year-old structures with old wiring, old roofs, and outdated plumbing. That makes them high risk. And the insurance companies? They don't want that liability. So they either drop you from your policy or jack your premiums so high you can't afford to stay. The average annual homeowner's insurance premium has jumped from $1,400 in 2019 to over $2,350 in 2025, with hurricane zones averaging $6,400 or more. And now there's a new trend: partial denial. That's when your policy technically exists, but they won't cover your claim because they found a pre-existing condition you didn't even know about. It's the same game health insurers used to play. One leak in your attic? Sorry, that's due to wear and tear. Tree fell on your roof? Denied because you didn't trim the branches. Boomers are finding themselves fighting insurance companies while battling medical issues and budgeting Social Security checks. And here's the real kicker. Many of these homes are underinsured because when values spiked in 2021-2022, people didn't update their coverage. So when disaster hits, fire, flood, storm, boomers are left with 50K checks for 200K damages. This isn't bad luck. This is a systemic ambush. The American dream is being reverse engineered into a nightmare, and the insurance industry is leading the charge. Boomers are getting priced out by their own children. This one stings, and it's not just financial, it's emotional. Because for decades, boomers were told their homes would be their legacy, something to pass down to the kids. But in 2026, their own adult children are competing against them and winning. Let's talk about multi-generational competition. Millennials and Gen Z are now in peak home buying years. And unlike boomers, they're not trying to downsize, they're trying to get in before they're priced out forever. But these younger buyers are coming in with FHA loans, 5% down, bidding wars, and government-subsidized first-time homebuyer credits. Boomers, on the other hand, are walking in with fixed retirement income, shrinking savings, and a mortgage broker who's trying to get them a 7.5% rate on a condo built in 1983. There's an ironic twist here. Boomers helped inflate this housing market by holding onto property for decades, reducing inventory and contributing to the supply crunch. Now, that same inventory shortage is coming back to haunt them. And guess what? The new builds that are popping up? They're not for them. Most are vertical townhouses with narrow staircases, digital keypads, and HOA rules that make RV parking and home modifications impossible. The modern housing market isn't built for retirees. It's built for dinks, dual income, no kids, with online jobs and zero intention of ever growing old in place. So when boomers try to move, downsize, relocate, simplify, they're losing to younger buyers with better credit utilization, more energy, and sometimes even their own money. According to the Urban Institute, 35% of millennial homebuyers received direct financial assistance from family to afford a home in 2024. In many cases, from the very boomers now trying to downsize. Yes, you heard that right. Boomers funded the competition. Now they can't even compete with it. And don't even think about renting. Average rents are over $2,150 a month nationwide, and landlords want 3x income, perfect credit, and no pets. So if you're 68 on a pension and have a rescue dog, good luck. You've been priced out by your own future. Reverse mortgages were the trap door, not the safety net. The biggest financial scam boomers walked into with a smile on their face wasn't subprime lending or crypto hype. It was the reverse mortgage, sold to them like a golden parachute, pitched by celebrities in late-night commercials. Reverse mortgages were marketed as a genius way to tap into home equity without ever having to make another payment. Live in your house for free, they said. Get paid just to stay put. But what they didn't say, what no one said, is that this free money came with strings thick enough to hang a generation. In 2025, there are now over 1.3 million active reverse mortgage borrowers, and the defaults are coming in hot. According to HUD data, 17% of reverse mortgage borrowers are now considered at risk of foreclosure, not because they missed a mortgage payment, but because they missed a property tax or homeowner's insurance payment. That's the ugly clause. If you don't keep up with the home's expenses, the lender can seize it. Imagine living in a house for 40 years, pulling equity out in your 70s, and then getting a foreclosure notice at 81 because your escrow was $200 short. This is happening right now. And here's what no one warned them about. Reverse mortgages balloon. Interest accrues monthly, and when it's time to repay the loan, Usually when the borrower dies or moves into a nursing home, the full balance is often more than the home is worth. That means millions of boomer families will inherit debt instead of property. In 2024 alone, the average payoff for a reverse mortgage exceeded the property's value by $35,000, according to the Consumer Financial Protection Bureau. And many of these homes? They're in no condition to sell. They've got old wiring, termite damage, roofs that haven't been touched since Clinton was president. And because the homeowner couldn't afford upkeep, the house sits there deteriorating, with a reverse mortgage balance growing faster than the home's appreciation. It's a slow foreclosure in disguise. Boomers were sold on the idea that they'd die in their homes, peacefully. Instead, many are being evicted from the very assets they thought would carry them through their golden years. Reverse mortgages weren't a solution. They were a high-interest trapdoor, dressed up to look like a safety net. And in 2026, that door is swinging wide open. The medical bills are raiding the roof fund. You can't separate the cost of housing from the cost of aging, because the truth is, for boomers, the mortgage isn't the problem. It's the medical bills that are cannibalizing every dollar they have left for housing. According to Fidelity's 2025 report, the average retired couple will need $351,000 just to cover out-of-pocket healthcare expenses in retirement. That includes premiums, co-pays, dental, vision, hearing aids, medications, and long-term care that isn't covered by Medicare. And that number? It's rising 12% annually, outpacing inflation and wage growth by a mile. Now take that cost and drop it into a household living off Social Security or a small pension. What disappears first? The home maintenance budget, the new water heater, the termite treatment, the roof replacement. All pushed off again and again until something breaks. A recent survey by the Senior Citizens League found that 76% of boomers have delayed or skipped necessary home repairs due to unexpected medical expenses in the past 2 years. You know what's happening here? They're choosing between antibiotics and air conditioning, between insulin and insulation. These are not luxury decisions. These are life or death trade-offs, and they're happening quietly, behind every closed door in suburbia. And let's talk long-term care for a moment. In 2025, assisted living costs now average $5,547 a month, while full-time nursing care averages over $10,000 a month. And no, Medicare doesn't cover it. Medicaid will, after you've sold your home, drained your assets, and spent down into poverty. This is the system. It punishes you for aging. The American retirement model wasn't built to accommodate 25 years of post-work life. We extended lifespans without extending support. Now we've got 74-year-olds with chronic illnesses trying to patch 40-year-old roofs while rationing pills and hoping their Medicare Advantage plan doesn't drop their doctor. You want to know why boomers are losing their homes? It's not always because they can't make the mortgage. It's because everything else is bleeding them dry. Medical inflation has reached a point where even home ownership can't protect you. The house was supposed to be a fortress. Instead, it's become a wallet. One that's now empty. And we haven't even reached the worst of it. The illusion of wealth is collapsing in real time. We need to talk about the most dangerous lie ever sold to the American people, that baby boomers are the richest generation in history, that they're all sitting pretty with beachfront property, fat 401ks, and golden pensions, that they've won the game. But in 2026, that illusion is finally cracking, and what's behind the curtain is terrifying. According to the Federal Reserve's 2025 data, boomers control roughly $76 trillion in assets. Sounds like a lot, right? But here's the problem. Nearly 75% of that wealth is tied up in housing, and it's paper wealth, not spendable cash. And worse, that wealth is concentrated. A full 56% of all boomer wealth is held by just 10% of boomers. That means the average retiree isn't swimming in money. They're drowning in costs. So yes, on paper, boomers own homes worth $500,000, $600,000, maybe more. But that home is also crumbling, taxed to death, uninsurable, and in many cases mortgaged again after a cash-out refi. And unlike a savings account, a house doesn't feed you. It doesn't pay medical bills. It doesn't keep the lights on unless you sell it. And in today's market, selling means giving up everything familiar just to keep surviving. This is phantom wealth, and the collapse is happening in real time. According to the National Association of Realtors, home sales among seniors aged 65 plus have dropped by 29% year over year as of late 2025. Why? Because they can't sell. Buyers can't qualify, insurance is scarce, and boomers are discovering that no one wants a two-story fixer-upper with linoleum floors in a city that's already losing population. And if you think they can just tap into that equity, let me hit you with this. Home equity lines of credit, HELOCs, are tightening fast. Lenders don't want to give six-figure checks to 77-year-olds with no income stream and a 40-year-old furnace. So they're being denied. Their homes are worth $600,000, but they can't extract a penny. It's monopoly money. And now the illusion is shattering. For decades, boomers believed the equity in their homes would be their parachute. Instead, it's a prison. One with rising costs, no exit strategy, and no second act. They aren't rich. They're stuck. And that is the beginning of the end. Home ownership in America, once the symbol of freedom, success, and stability, has now become the ultimate curse for the very generation who once embodied it. And no one is saying it out loud. But I will. The house that was supposed to be the reward is now the punishment. Let's be brutally honest. Boomers did everything right. They bought homes in the 70s and 80s. They locked in 30-year mortgages when houses were $70,000. They rode the greatest asset bubble in human history. But nobody told them what happens after the mortgage is gone. What happens when you outlive your savings? When inflation eats your pension? When your adult children move back in with grandkids in tow? What happens when the cost of just existing in your house, taxes, insurance, maintenance, aging-related upgrades, exceeds your income every single month? Here's what happens. You stop owning the house. The house starts owning you. It tells you where you can live, when you can retire, what healthcare you can afford, what food you can buy. It becomes a financial anchor tied to your ankle while the economy sinks around you. And for millions of boomers, that dream is now a nightmare with hardwood floors. You want numbers? Let's talk about the elder homelessness crisis. In 2023, there were 84,000 homeless seniors. In 2025, that number passed 112,000. And by 2030, it's projected to double again. According to Harvard's Joint Center for Housing Studies, over 50% of boomers now spend more than 30% of their income on housing costs, a level that qualifies as financially unstable. And these aren't irresponsible people. These are teachers, veterans, nurses, factory workers, the people who built America. Now they're downsizing not by choice, but by force. They're living in cars, in RVs, in extended stay motels, or in the back bedrooms of homes they used to own outright. Boomers aren't just losing their homes, they're losing their identity. Because for decades, the home was the identity. It was the proof of success. Now it's a source of shame. And that collapse, it's not in the future. It's here. It's now. This is the end of the road for the American housing myth. In 2026, we're watching the fallout in real time. And unless something drastic changes, the next generation will inherit nothing but debt, disrepair, and a legacy built on sand. This isn't a housing correction. It's an extinction event for America's middle class. Boomers aren't downsizing. They're being erased. If you think this ends with them, you're wrong. You're next. So before you scroll, ask yourself one question. How long could you survive if your home turned against you?